In this video, guys, I'm going to ask the question, are you an all or nothing trader? Stay tuned. Hey traders, a very warm welcome to you. So, this is an interesting one. Are you an all or nothing trader? The good news is, if you are, you might be struggling now, but you have got one of the better attributes than the other side of the coin, which are people who are literally tiny, small traders who are just trying to get small wins. What I mean by an all or nothing, what I mean by a small, tiny trader trying to get small wins. If you're an all or nothing trader, you are constantly looking for the big win. You hold a position, you're trying to get the big win on each and every trade, versus the kind of small hit and run guy who is there just scratching out bits, scalping, and never holds for the long, bigger picture. You have got a better chance of making really good money than that guy. That guy, who actually is the majority of traders out there taking small profits, struggling to hold things to run. You've got the opposite problem. You're the guy who never ever takes small profits. You're always holding stuff. Now, the good thing is that muscle is now flexed and you've got the ability to hold it. The bad news is it's not conducive as well to success, because you end up losing regularly, and you leave money on the table because you don't take it when it's offered to you. So let's talk about and look at some of the kind of clues that you could be this type of trader and ways that we could combat it. Okay, number one is holding all trades for a big win. So if you're holding every single trade for a big win, and by the way, I knew a trader exactly like this, and he exhibited all these characteristics. He would hold a trade for a big win. He would never ever scalp it out, Whereas I was always the other way around, always be like grabbing profits, go again, and trying to stretch the muscle of holding the trades for longer. He was the other way around. He would never ever take money. Even if he was up a significant amount, he would never take it. Every trade was always shooting for that big home run swing. Number two, refusing to take what's on the table. So I know that there's a fine line, guys, and this is where trading comes in. It's like, hey, I want to run my profits. Hey, I want to take what's offered. But sometimes, there are certain rules to follow. That's like, hey, I've made good money in a short period of time, as this guy would. Good money in a short period of time, still not taking it, still thinking it's going further, And now you're getting to the realm of unlikely. When you've moved a certain percentage in a certain amount of time on certain things, it becomes less and less likely to do the same or triple that or quadruple that in the same period of time. Just the nature of the markets. They do go up and down. They don't go in a straight line for forever, for a long period. I know there are exceptions. We've had cryptos and stuff, but you get the point. Often you get a big move. It's working very nicely for you. That's a little E, if you didn't know. And they don't take the profit. So keep an eye out for that. We're refusing to take what's on the table, even if it's a good profit. Number three, sitting on a trade that's profitable until it's negative. So I've seen this before, guys who've been up massive amount. You're there, you've got huge profit on the trade, decent size, lovely profit, and then the next day comes all the way back and goes negative, and finally they've come out of it. And all because they wanted that little bit more. It might be that it's gone up, a decent amount, and they wanted just a tiny little bit more. They're thinking, oh, I want to make 10 grand out of this trade, I want to make 30 grand or whatever it is, and it's just a little bit short of it. And then they hold the thing all the way down, rather than managing the risk as the trade goes in the direction, holding it for that home run. Number four, not getting out when it's clear the trade is wrong. So this is when it goes against you, right? You're in the trade, it's going against you. You don't want to cut it because you think this is the big one. This is the one that's going to make me that 50K. It's going to make me all that money. I want to stay in it. I want to ride this thing right. And you're holding it. It's going down. It's painful. And they don't cut it. So they almost do the same thing, but the opposite way with the loser. I don't want to lose this opportunity because I think it's a really big opportunity, and they're framing the entry around that. Whereas the other trader who's scalping out might well be good and disciplined at taking stops as well, but they're also going to cut their profit short. So it's kind of the complete reverse of that type of trader. And the similar thing, guys, is that, number five, trading without reason to avoid missing out. So this is the big thing. If you're a trader who is looking for the all or nothing trader, if you're a trader who is an all or nothing trader, should I say, this is the seed of it. It's the fear of missing out on the big trade. It might have come from the fact that you've taken small profits before and missed out. More than likely, It's come from, hey, I want to be in for the big moves and only for the big moves. And you're not measuring it. That is such an admirable quality. It's such a quality that many traders who are taking small profits and not running would love to possess. But it's just dialing it down a touch. It's just grabbing that, that instrument, just bringing it down a little bit lower so that you're measuring that. Maybe you're adding a scale in. Maybe you're taking some off the table. Maybe you're doing something to feed that short-term profit that's often there quite frequently and not always holding out for the real long-term one. It's a fine line, I get it, it's not a right or wrong, but this is the person who's the extreme, who actually is struggling because they're up unrealized profit, a massive amount, and they give it back, and that emotional swing as well is just so brutal for them. And often, they're trading that reason to avoid missing out. They think it's the next big thing. They jump on it. There's no real cool calculated plan behind it or strategy. They're just hitting and pulling that trigger. And finally, guys, trying to force your will onto the market. So, we look at the two distinct different sides. We've got the guy who is like this, who's always looking. He's forcing, saying, hey, I want this market to go up 1,000 pips. I want it to go, so I'm going to hold it. And the market might just be in a range. It might just be in a very shallow trend. And it might do that, but it might take so long and it might reverse back and do this and do that. So it becomes, an unfeasible trade. Whereas it could go 300 before it cycles lower, and that's the natural cycle for it. So you've got the guy who's taking 20 pips, you've got the guy who wants 1,000 pips. Somewhere in the middle is the perfect sweet spot for the market you're trading. And those numbers are arbitrary, by the way, just for the market you're trading. If it's doing those 300 pip rotations, it might make sense to look for 200 pips on the trade rather than 10, rather than 20. Rather than 1,000, unless you're prepared to sit through 400 pip pullbacks and the grubbiness of the market. So you don't exert your will on the market. You let the market tell you what it's likely to offer, and then you frame your trade around that. So the good news is though, guys, if you are an all or nothing trader, it's an easier thing to measure and dial down, I believe, than if you're kind of scalper who just grabs quick profits all the time, trying to stretch that muscle. But somewhere between the two is a sweet spot for trading. It's our job as traders to find that sweet spot.